Good morning. It's April the 28th, Friday, last day of the trading month and last day of the week. We'll start with our customary disclaimer. Hypothetical or simulated performance results have certain limitations, and like an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they're designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Okay, we're adding to our service this week with Pat Tabbitt's statistics. They will be posted on the bond, crude oil, and the E-mini as soon as he gets them. They will be put into the room. I suggest you copy those and print them out. Pat and I will comment on those as they come up. The purpose is to just give you the probabilities of the market doing certain events, and statistics are statistics. They sometimes they can be very helpful. They're always helpful as guidelines, and sometimes they work and sometimes they don't. So we'll be focusing on how do they reinforce the trading, and if they support our trading ideas, we have a stronger trading setup, and if they don't support it, then we have a weaker, so we can be a little bit more cautious. So we're pretty excited about the potential of those. Today is a post-auction day. It usually yields a pause day, but we have news today that could move the markets. GDP. Gosh, I'm not showing the screen I want to show. Where did that go? There we go. Really going to be down to the GDP number. I've seen GDP, Fed Bank of Atlanta says plus 0.2. The best one I've seen is plus 1.3. Our consensus today is 1.1. This number could come in lower than forecast. The deflator probably will nail it. We're at our usual default, 2%. 2% inflation, 1% growth. What is that called? Stagflation. Remember, we've been talking about stagflation for years as the most likely outcome. Consumer spending up 0.7. That's 3.5% year on year. It's a pretty healthy number. Consumer spending. What's happening to why not the rest of the economy? What we're missing is capital improvement, capital growth, building of factories, plants, businesses investing in themselves. And that $2 trillion that's sitting offshore, if that were allowed to come back into the United States, would have a lot to do for that. The United States has an energy cost advantage. The United States, it's harder to steal assets. I mean, in the United States, not impossible if the government gets after you. Have we seen with all these fines imposed on energy companies in the banking sector? But that's a lot better than it is would be like in a Syria or Russia, China, Africa, South America. So cutting taxes, Trump can get that through. I think the most important Trump tax cut out of all of them is cutting the corporate tax rate from 35% to 15%. If he does that, he doesn't have to do anything else. Everything will just fall into place and take care of itself. Employment cost index up 0.6%. The economists will pay attention to it. The market won't. Consumer sentiment 98, could come in lower than forecast. And Baker Hughes rig count 956, 857 for U.S. rig count. The U.S. rig count could be up, and this number is down. The reason I am told that it goes down in the spring is that Canadian rigs fall out of production as the big thaw comes across Canada. And I think the spring breakup and when the ice breaks up and everything is kind of around, for a lot of Canada, is May the 1st. In the pictures that I've seen. So anyway, the news focus is GDP, perhaps consumer sentiment. But this is the big number, and that's the number that can move the markets. Right now the market is pointed lower. The feeling is the E-mini is going to trade up. If the E-mini does trade up, treasuries will be lower. Normally we'll have a pause day after auction week. All the cash buying needs in the 2 to 7 year maturities is gone. The cash players are not buying today, and the dealers have to balance their books. So it takes two of the major components of the market out. It takes major news to get things going, and we could have that in GDP, and my guess is it's probably going to come in lower than forecast. So 2327 is our first sell zone, subject to news. 31 to 03 is number 2. 17 to 13, buy 1. 5 to 9, buy 2. Down to the news. And, you know, people say, oh, God, I can't trade news. We need news. It increases the volatility. Gets things going. That's why gold is trading better than crude right now, because we have 3+ days a week of news. And gold will react to a lot of that news. We have 1 news days a week plus comments from OPEC, strategically planned and released. That's what we have to face in crude, and that's why crude has been so slow of late. If the hedge funds go back to the short side of the market, not just the long side, as it looks like they may have, then we can get crude should come back and give us the trades that we've grown accustomed to getting out of it, the volatility that we need to make it work. Okay, 20 to 24 is number 1 resistance on the bond. Selling 27s to 31, sell 1. I'm going to make 3 to 7, sell 2. I don't think we can take it higher. It's down to the news. 8 to 12, number 1. So 1 to 5 is buy 1. 21-25, buy 2. Easier to break the bond than rally it. Gold was quiet when I looked at it this morning, basically unchanged. GDP news will move this. Just kind of hanging in there. We got a buyer at 65. 60 to 65 is support. 70 to 75 is resistance. We're awaiting news. We'll do a London split. So we have 2 P's behind us. We can see that this high volume area held overnight. So have a pretty good shot with the news if it comes in as expected, plus 1.1%. Getting up to the 75 area. Right now we are at resistance, so 70, 72, sell 1. 74, 76, sell 2. Down to the news, we'll have to adjust it after the news. 63, 65, buy 1. 59, 61, buy 2. Be interesting to see how this GDP number of Trump is treated. I imagine if it's a negative number or comes in lower than forecast, mainstream media will be talking about how catastrophic the economic situation of the United States is. And you have to remember, over the last 8 years, the press hasn't reported anything that way. It's always been, well, it's coming. Yeah, things are bad. Things were bad. They're getting better. Just wait, hang in there a little bit. But 90% of the articles, business-wise, politically, in the news on Trump and his administration and his cabinet members and his policies are negative. And he's having a lot of trouble legislatively, and it's not coming from the Democrats, it's coming from the Republicans. But he's having he's doing a lot of good things administratively with his executive orders. I'm going to open this up a little bit on the euro because of this morning's news, GDP news, but there could be pretty good support at 50. Draghi's comments yesterday were taken as dovish. Current friendly interest rates low. Will be doing whatever they need to do to support the economies of the EU. Brexit is not a problem, be handled, so on and so forth. But the Draghi comments were taken as dovish. Status quo will remain intact. Bank of Japan has said the same thing. China tries to tighten, but can't. Every time they tighten, their economy starts to slow down. Their economy is driven by debt. Sell 1, 75 to 50. I think it's going a little bit higher. We came up pretty nicely off of yesterday's lows. And 50 and a quarter, 50-50. 50-50 is our best resistance on the assumption we can get through 50. And that's that break or spill. It's right over there. On the buy side, 49, 49 and a quarter. And then 48 and a quarter, 48.50 for buy 2. The problem with Trump's success right now, which is really, really beneficial for industrial policy and business, is that if he doesn't get it done administratively, when he's loses office or no longer runs for office, the next president can come in and change those rules and regulations as easily as Obama did, now that Trump is doing. So you really need to get it done legislatively, which got to go through Congress if you want to keep them in place until the next administration, past the next administration. And that is the role and function of Congress. They're the ones that are supposed to legislate and make the rules and laws. Not the president. He's supposed to enforce them and see that they're done. Okay, 90 is resistance. It's a news trade, 90.91. So 90 is resistance, sell 1. 94.96, sell 2. That's where resistance is right now. It's down to the news. On the buy side, we'll go 80, 82. And then 75, 77. Okay, GDP I've seen plus 0.2 to 1.3. Econoday is carrying 1.1. The deflator is a factor. We'll hit that number of plus 2%. Then we'll look at consumer sentiment at 98. That number could come in less than forecast. So those will be the two biggies. And then Baker Hughes rig count for the energy players. So down to the GDP number. If you know what that is, you have the trade. We'll be back upon the release and talk about it and try to get a strategy that works. I'll be back for actually, Pat and I'll be back for the bond stat comments here in about 10 minutes, 10, 12 minutes. It'll take a bit to get everything up and posted. I'm going to get busy on that. I will see you as soon as possible.